Hi everyone, and welcome to this edition of the Teach Me Tuesday segment. Today I've got a special guest. I've got Esther from Household Capital.
Hi there, it's good to be here.
Hey, thanks for coming.
Thank you.
Today's session is actually on retirement funding, or as a few of the veterans in the industry would know it, it's called a reverse mortgage. So thanks for taking time to chat to the audience today. I'd love for you to run through, who Household Capital are and, basically the product itself and why a broker should be able to use you guys. If that's okay.
Would love to. Very happy to.
Excellent. And then at the very end, I'm going to ask you 5 things I'd love for you, well, you would like the brokers to, walk away from the session today and actually remember about
Sure.
not just you guys, but in terms of, the reverse mortgage or retirement funding.
Yeah, okay.
Okay.
Happy to do that.
Excellent.
So as Deanne mentioned, I'm talking to you today about a new lending opportunity to an overlooked but growing client segment. We call this 60 plus lending, to helping clients over 60 years of age to meet their needs. Previously, people referred to the product, as Deanne mentioned, a reverse mortgage. Our product is also a reverse mortgage, but we actually think it can be much bigger than that. And today I'm going to show you why. There are some really large numbers that I'm going to go through now, and I'm talking about the opportunity that exists. So we've got 5 million baby boomers, with almost half of those already retired. Retirees are wealthy. 50% of Australia's wealth is held by this generation. Much of this has been created by home ownership, with about 80% owning their home at retirement. But it's not all smooth sailing. Around a third of people retiring still have household debt. So whether that might be from renovating later in working life, an unexpected event in their 50s, or perhaps they've helped their kids. The bank of mum and dad. We've all heard about it, and maybe Australia's 5th largest bank, with 15% of kids reportedly getting help from their parents. That number surprised me, Deanne. 36% of Australians who are retiring still have debt.
That's pretty scary, actually, isn't it?
Realising value from the home is often through downsizing. And while survey data tells us 80% of retirees want to stay in their home, we estimate 1 million retirees will move home. They don't want to move away from their community. They've told us that. That's where their life is. That's where their families are. And recent census results confirm this. So what's different about lending to over 60s? Well, obviously it's helping older clients, and there are some differences from your younger borrowers. Their financial situation may be focused on retirement savings. If they're working, they may be part-time or thinking of retiring soon. So obviously their planning horizon might be different. But there are some similarities, particularly the purpose of the loan. And here are just 3 examples. So the first is refinancing home loans. We've seen many brokers helping their clients to switch from a traditional home loan to a reverse mortgage. They might continue to pay interest at the first stage or improve their cash flow by paying the interest when the home is sold. The second is helping the kids. This can be to help them when they need a home deposit or reducing their mortgage, or maybe it's helping their grandkids with school fees. Something like 60% of private school fees are paid by the grandparents. And the third opportunity we've called right sizing. We see brokers helping their clients afford a better property in their community, or they renovate and fix up the home so that they can stay there for many more years. To help brokers implement these strategies, we've created 4 options to help meet their needs at different stages. So when it comes to product, in many ways, there are a lot of similarities with typical home lending. The products are similar: NCCP complying residential mortgage lending, but there are differences also. For example, limits on how much can be borrowed, the flexibility around interest payments, the cost associated with that flexibility, and the impact that flexibility can have on the client's cash flow. We've created 4 options that offer different interest payment flexibility and the resulting impact on cash flow. First, we have the optional retirement interest only 100, our Oreo 100. This might suit someone transitioning to retirement that can continue to make interest repayments, preserving their remaining home equity. As we receive a regular interest payment, we can actually offer a reduced interest rate. Next, we have our optional retirement interest only 50. This option suits someone that can make part interest payment while letting the remaining interest costs accrue to the loan. Again, with some regular payments, we can reduce the interest rate. Then we also have options that allow the interest to fully accrue to the loan. While the loan can be repaid at any time, it's not required to be repaid until the home is sold. These options both improve the client's cash flow, and in the case of our Household Loan Plus, it can significantly improve cash flow by creating a regular income to top up other sources. Deanne, I'm going to go through a couple of scenarios. I'm going to bring this to life. I want to introduce to you Jenny, who's 70, and Greg, who's 72. They're fit and healthy. They love their beachside home in Coogee in New South Wales. It's valued at $1.95 million. They are self-funded retirees, but they wish to renovate their home to make it safe and comfortable for their future. They have an existing NAB mortgage of $200,000 that helped them get into their home 15 years ago. The problem that they have currently, or when they came to see us, was that they didn't want to draw on their income producing assets to undertake the renovations. And that was quoted at $350,000. So Jenny and Craig were able to access, based on her age, as she's the youngest borrower, 30% of their home equity, and that was an amount of $585,000. They applied for a household loan of $550,000 to pay for the renovations and clear their current mortgage. So in this scenario, Jenny and Greg chose to use our household loan. Now, when you go through the presentation yourselves, you'll see that there are a few scenarios in there, but today I'm just going to go through 2. The next one that I want to go through with you is my client, Cinzia. She's 66 years old, she's single, and she lives in her 1-bedroom apartment in Mossman. It's valued at $900,000. She's currently not eligible for the age pension, and she's still working part-time as she transitions to full-time retirement. Cinzia has a small mortgage and some credit card debt, which has become increasingly difficult to meet the P&I repayments as interest rates, as we all know, have increased. And no doubt you've had a lot of clients come to you with a similar problem, that they're struggling to afford both P&I based on the increases. Cinzia also needs a new car, and she'd like to take a vacation to Italy to see her family one last time. So based on Cinzia's age, she can access 26% of her home equity, and that's an amount of $234,000. She applied for the Oreo 100 household loan of $210,000 to be allocated, with $140,000 to refinance her mortgage and pay out her credit card debt. And with our Oreo loan, she would only be paying for the interest rather than the principal and interest. Cinzia has set aside $70,000 for her new car and her vacation, which she'll draw on when she needs it. And at time of settlement, her monthly interest only repayment was $956 per month. The Oreo 100 has a lower rate than the household loan, and by paying the interest, she maintains her equity position. So, what could working with 60+ clients mean for your business? The good news is you don't have to look too far. We know that within a broker's client base that on average 2 in 10 clients are over the age of 60. These clients could consider refinancing, and not just a rate review, but really thinking about how their current repayments are impacting their lifestyle. Almost 2/3 of our loans introduced by brokers are to refinance an existing loan. Typically means they're larger loans. In the old days, the average reverse mortgage at establishment was 70,000. That was, 15 years ago. With our new products, we're seeing much bigger loans, on average around 400,000. And that's not surprising given the huge growth in property values. And of course, this means higher value to you. Overall, a typical 5-year loan, we would pay a commission of about $8,500. So not only can you help these clients meet their needs, but they can be a new source of revenue for you. Now, finally, how can you work with Household Capital? We'll give you 2 options. You can choose to learn more about 60+ lending and become an accredited broker. This is much like any other lender accreditation and worth investing the time if you're likely to be using the product frequently. Essentially, you are originating the loan with our assistance. Or you might choose to refer your clients to us and we take care of them via our spot and refer model. But either way, together, we're helping a segment of clients who were once overlooked to now providing them with choice and flexibility when it comes to their financial futures. Lastly, I'd like to thank you and obviously Finance and Coffee for the opportunity to allow me to speak to you today. I hope that I'm leaving you with a different and fresh perspective of 60+ lending solutions. Our telephone number, our website, you can scan the QR code that's part of the presentation to get our details on how to work with us directly and get in contact. We'd love to hear from you. Thank you.
Esther, thank you for that. Now, guys, just as a reminder, because this is going to be part of the monthly quiz, which will go out next week, please look at the presentation that will be in the file section. Also review this video because the questions in it, there will be 5 on Household Capital, is actually in this video. So, please watch it again, rewatch it again. And as always, with regards to the quiz, it is not the least amount of goes. It is actually the person with the highest score before the quiz closes. Okay, so you can play it as many times as you want, as long as you get the highest score before the quiz closes, and you can win $1,000. Okay, apart from that, Esther, thank you so much for your time.
Thank you. It's been a pleasure.
All right. Talk soon, guys.